The recent fall in South Africa's banking index reflected global market sentiment. Billions were wiped off the market in the last week, and most currencies fell sharply. South Africa's banking sector also escaped the worst of the global financial crisis in 2009. There's been more regulation since then.
The big difference between our banking system and the US, for example, is just the very closed nature of it and the simplicity in a sense. So, a bank that disappears a deposit that disappears out of one bank finds its way into another very quickly, and the banks really close ranks through the interbank lending market to ensure that if a bank is caught short on any given day, that deposit is essentially returned.
All our banks have got exposures through the financial system where they've got lending or borrowing lines which are available for them to access based on our currency, from euros, pounds, dollars, yen. They're more exposed to us than us being exposed to them. And hence, we're not going to feel the crisis.
While there's been little exposure overseas, South African banks do have exposure on the rest of the continent.
We've had some of the risks that you're seeing in the US playing out in Ghana. So there, the subsidiaries of Standard Bank and ABSA have certainly been caught with some exposure there. That's a banking market, for example, where the local banks hold quite high proportions of government bonds. You have potentially, the risk of default.
The South African banking industry is the largest on the continent. In 2021, the combined Tier 1 capital of the sector reached over $34 billion. While there's always a risk, regulators do believe that the overall financial services industry is safe.